Natasha Condon, welcome to Trade Finance Talks TV.
Thank you very much.
So, introduction, who are you, where are you from, and what do you do?
I'm Natasha Condon. I work for JP Chase in the payments, which is the transaction services division. I'm the global head of core trade.
Thank you. So here we are, ITFA in lovely Porto, and I think difficult decisions have been one of the key themes and trending points for trade and trade finance, and business owners such as yourselves have really had to face difficult decisions and face trade-offs. Could you talk through some of those decisions that you've had to make?
Absolutely. I mean, on a strategic level, as a sort of a trade product manager, as a business manager, I don't think anything has changed, in the sense that at the end of the day, I get measured on the same things that I got measured on previously, right? Do I generate revenue for the bank? Is that revenue at a return that makes it attractive to the bank? Am I protecting us from the risk environment outside? And that's where obviously the key question has been over the last few months. You know, am I looking after our people? Are we a place that people fight to work at? And if I'm delivering all those things, then fundamentally I think I'm doing my job. The challenge has been that over the last 6 months, of course, the environment outside that we're trying to deliver those variables in has changed pretty dramatically. I think for me, the big one has obviously been risk and the impact of the invasion of Ukraine on, you know, not just the commodity shock, but the knock-on effect on our corporate clients, on our bank clients. You know, one of the things that really strikes me is that when COVID kicked off, which was also a sort of sudden shock in the same way, a black swan if you like, suddenly there were companies that were perfectly financially healthy that were in trouble because of the enormous demand shock that came with the lockdowns. You know, travel and so on, a lot has been written about that. Now you've got the energy shock. You see the same things happening to some of the highest rated, the highest quality companies in the world. They are completely healthy from almost any measure you would use to measure credit risk, you know, financial risk. They're even in a constrained working capital environment, they're basically fine. But they might be technically bankrupt this week because of the margin call demand. And that really puts a strain on the quality of your risk management really gets tested. I'm pretty happy and pretty proud of you know, where we are, where we've been, the position that we're in right now. But there is a lot of this still to come. And, you know, Northern Hemisphere winter is approaching. We all know that the real test hasn't arrived yet.
Yeah, absolutely. And I think the next few months continue to be unriddled with uncertainty, particularly around inflation rates, energy prices, etc. How are you preparing to deal with this down the line, not just from a JP Morgan perspective, but from the corporates you're kind of helping?
I guess a couple of things. We are trying to be nimble. So, you know, we're not cutting and running. We're not running away from geographies or client segments or anything like that. As I say, I have a lot of faith in a very high quality kind of risk management function where I'm lucky enough to work. But you do also have to be ready to respond very quickly, because in this situation things can change overnight. One of the things that I have noted in the market that I'm really pleased about is that I think there's more collaboration happening between banks in this environment. You know, again, I'm lucky enough to work for a dollar-denominated bank with a fortress balance sheet. I know that for a lot of my peers out in the market, you know, you can see that cost of funds is going up, liquidity is getting tight. You can see on almost any measure of liquidity, you know, liquidity is coming down. And in that environment, you know, they may have the credit lines, for example, but they don't necessarily have the dollars, or they don't want to put those dollars out the door for a particular transaction. And so we are doing a lot partnering with other banks to make more capacity available to our clients in this environment. And I think that's definitely going to continue.
Sure. Let's talk about digital transformation, which I think has been another key theme, especially in yesterday's fintech session. What really is driving digital transformation from a bank FI perspective, and what are the priorities that you look to see when a fintech comes to you to say, you know, we think we have a solution for you?
Sure, absolutely, and I will not rant about this despite the temptation to do so, but I do think that sometimes there's a gap in perception between how the fintechs think banks make these decisions and how banks actually make these decisions. And one of the points that I've tried to make is that, fundamentally, I'm fortunate enough to have a budget that I can spend on R&D, on technology development, on improving my capabilities for my clients. What am I spending that on? I'm spending it first and foremost on making sure that I meet regulatory requirements, compliance requirements, that I am providing a high security service in every country where I operate. And the more global I get, the more countries and regulators I get to deal with. Of course, that's the top priority because it's an entry point. You can't provide the service without meeting the requirements of the regulators. And a lot of regulators are very on the ball these days. There's a lot of pressure coming in on things like anti-money laundering. You've got MAS in Singapore taking a very hard look at duplicate financing of goods. You've got the PRA in the UK talking about anti-money laundering and how you evaluate the counterparties in a trade transaction. You've got the regulators in India looking at legal entity identifier and how you can identify clients or corporates that are not your clients, more importantly, in a trade transaction. And if that requires tech investment, that's where my dollars are going. Second priority is, where can I really move the needle on my business? Where can I serve a whole new group of clients? Where can I open up a whole new product capability that wasn't there before? Third one is, how can I deliver it more efficiently? We're all right now in this brutal battle for talent globally. I've got brilliant people in my operations team with 35 years of experience who are going to retire in next few years, and they are utterly irreplaceable. There's the demographic cliff edge in trade finance has been written about a lot. So if you can bring me solutions that will help me to compensate for the loss of those people, I'm interested. And then somewhere down the bottom of the list is this kind of where a lot of the fintechs pitch themselves, which is, I've got this really clever idea that will benefit the industry, and I've got a well-designed, elegant technology solution for it, and your clients will like it. But fundamentally, compared to those first three priorities, it's a nice to have. And I wish more fintechs would come to me with solutions for priorities 1, 2, and 3, because a lot of the time I feel like I'm talking to them about priority 4, and there's never as much money as you would like to spend. There's too many good ideas, and you've got to prioritize somehow.
Yeah, absolutely. Well, Natasha, thank you very much for joining us on Trade Finance Talks TV here in Porto. It's been a pleasure.
Thank you so much. Enjoyed it.